Namibia's central bank has kept its key lending rate unchanged at 5.5%, saying that steady rates were needed to support economic growth. For more insight on the bank's decision, joining us from our studio in Windhoek, the NBC studios on that end, we've got Upumbu Shimi, Governor of the Bank of Namibia. Governor, thank you so much for joining us today. So firstly, let's just get kind of the overall view on the decision today to keep rates unchanged. What underpinned that really basically no change decision?
Thank you very much. The decision to keep rate unchanged is informed by our assessment of the global economic conditions as well as conditions at home in Namibia. What we're seeing from the international perspective is that the recovery in the global economy remains weak. We have seen prices declining, metal prices declining, which is not good for commodity producers. We have seen some signs of recovery in some economies, such as the US. But unfortunately, when you look at our key trading partners, such as the Euro area, the pace of contraction has actually increased. When it comes to Namibia, we are pleased to know that Namibia is still growing at a respectable growth rate of more than 4%, which is still quite significant compared to what is happening in the rest of the world. We have also observed that inflation has remained stable at 6% in the month of May, compared to again, in fact, in the previous month it was at 6.1% as well. So inflation has actually moved sideways. So overall, those are the economic conditions. We believe the economy is still growing at a respectable level, and therefore there's a need to continue to support economic activities by leaving the rate unchanged.
Interesting, though, that you say that you could be upgrading your forecast for growth for this year higher than the 4.4% forecast. So which are the sectors which are starting to show slightly more strength than initially they had at the beginning of the year?
What we have seen as the sources of growth over the past few months is that mining still continue to be strong, particularly diamond mining. The demand for diamond has picked up, and that is in line with what we are saying in the US, because the US is one of the big diamond consumers, and as a result of that, the demand for diamonds has continued to be strong, especially since the beginning of this year. We also see manufacturing picking up, especially manufacturing that is related to construction, particularly cement production. That is also one source of growth. And the other source of growth, main source of growth, is construction.
When it comes to kind of the health of the consumer and credit extension, it seems that we've seen a tapering off in terms of the high levels that you saw credit extension reaching at the end of last year. So what's your evaluation as to kind of banks' willingness to lend right now? To what extent consumers are looking to borrow? I mean, what's your evaluation as to the outlook for the rest of the year?
Yes, you're right. There has been a marginal easing in credit, but credit still remains high in the region of 14% for us. That is still significant. Of course, when you compare to the previous month, it's a marginal decline, and therefore, if you actually look at credit, it remains strong. In real terms, credit is still growing in the region of more than 7% in real terms. So that is not a cause for concern for us.
So not a concern on that front, but going back to the economy right now, I mean, what is your sense as to what Namibia's economy needs most at the moment? Is it growth coming through from Europe? Is it concerns around China? I mean, what do you see as the major factors which are defining the growth picture as it's playing out this year?
Growth remains a sore point in for Namibia, especially Europe, which is a significant trading partner. China, we have also seen China softening up a bit when it comes to the growth in the previous quarter. But again, growth in China still remains highly respectable, or above 7%. That is still something significant, considering the size of the Chinese economy. So at the moment, we're not really worried about China because we believe growth is going to hover around the level of 7%, which is still significant. Of concern to us, however, is a decline in commodity prices that we have seen, especially prices for metal. That is of concern to us. Things like food and energy, that's good news. But when it comes to metals, that is something that we are watching very closely, because soon it may start to affect our export earnings and therefore the official reserves of the country.